even if we were to start to see things really tighten up, I think that folks moving forward with a franchise system for their first location of a business are going to naturally be in a better position because the banks understand that model and the fact that you don't need to come to the table with specific experience yourself. The franchisor is bringing that with them.
Hello, and welcome to the Hire Yourself podcast. We publish episodes twice a week about franchising and business. Each Monday, we'll release a 30-minute episode where we dive deep into a topic. Thursdays are our shorter, lighter episodes where we will discuss things like business resources or topics of personal growth. I am one of your hosts, Pete Gilfillan, and I'm joined with my business partner, Nat Truitt. And together we have every experience in business and franchise ownership. We have worked hard over the years to realize our dreams and control our own destinies. Our experience will help you become a better business owner and franchisee so that you can live life on your own terms. We are lucky enough to have a wonderful senior level funding expert with us today, Shirley Kefgen. Shirley, it is a pleasure to have you today on our podcast, the Hire Yourself podcast.
Thank you very much. I'm excited to be here. I appreciate the opportunity to join you this morning.
Now, Shirley, we have been working together for years. You've worked with a lot of my candidates, a lot of Nat's candidates. And I think one of the things that I like about you is that you're an expert. You really give people good advice as it pertains to how they could best fund their business. And so I know you work with most of my candidates to help them kind of figure that out. So today, what we'd like to do is spend some time picking your brain a little bit, just kind of pulling upon all that great experience that you have as a senior funding consultant. And I think the most important, or one of the most important questions for today as we get into this is, what are the different ways in which people can fund their business? That's a great question people always ask me is, what are my different options? If I want to invest in a franchise, where can I go to get funding for my business?
Yeah, no, you're right. I mean, I think that is one of the first questions that most potential franchisees I speak with sort of have in mind is, how could I do this? And I think with a lot of the folks we work with, they're sort of big purchasing experiences with a home, and so you're used to getting pre-qualified and pre-approved. So you sort of know what you're looking for in a home. And so I think people are looking for sort of a similar experience on this side of things, and trying to understand what all of the options look like and what could be out there. So when we talk about the different ways to fund a business, there are some that are pretty obvious. You can use cash. If you have cash, you can use it. That's there. We'll talk to some folks who think about maybe bringing in business partners or family investors, which while that certainly can be a viable option for a lot of folks, there's a lot to manage there, right? When we have friendships and family relationships that sort of come into play, trying to figure out who makes what decision, if Uncle Bob's golfing 40 hours a week rather than marketing, how do we deal with that? So while that's out there, I think maybe not quite as popular of an option as some other things that you'll see. I'll tell you that today, really, the most popular and most common ways for folks to fund a small business would be through a traditional borrowing scenario, where we're going to a bank and we're approaching them for a small business loan. Today's environment is sort of interesting because while banks need to lend money in order to make money, that cycle needs to happen for them, they're fairly conservative. And, one of the things that they're very dependent on are programs that the SBA, the Small Business Administration, has put in place to basically incentivize banks to put these loans out there. The federal government actually provides the bank with an extra guarantee that just makes them even more comfortable writing those loans. So as we do maybe dive a little bit more into borrowing in today's conversation, we'll be fairly focused on SBA loans specifically, just because that's really what banks are primarily focusing on today.
So let me ask you this, from a standpoint of funding and loans, are a good portion of them SBA or are they non-traditional, or I guess I would say just traditional loans?
At least when you're opening your first or probably even second location of a business, you will find that banks are highly dependent on the SBA programs. And today's lending environment is almost one where if they cannot get the SBA guarantee to go along with the loan for the first or second unit, the bank is unlikely to even write the loan. So yes, we are seeing a lot of SBA loans out there. Now, we certainly work with folks who open, 3, 5, 10 locations of a business over time. And once you do start to open the third, fourth, fifth locations, banks start to get more comfortable. You have a track record of success, you have some history under your belt, and that may open up the doors to some non-SBA, more traditional lending.
All right. So we have cash. And if you got cash, that's great. Sometimes it's not good to use your cash, right? I use the term keep your powder dry when I'm working with people. And then friends and family and partners and stuff like that, which brings all kinds of problems with it. I know, Nat, you've kind of done some of that stuff, and it's a little crazy, isn't it?
Yeah, it's always, I always tell people, one marriage is enough. You don't necessarily want to be in a second or third marriage with a business partner.
Well said. Well said. So, all right. So we know we have financing, and you kind of talked a little bit about SBA as being the lead thing if we're starting out a franchise till we get a track record and go to maybe traditional funding. So talk to us a little bit about the express loan and traditional SBA loan. So tell us the difference between those, because a lot of people don't know that.
Yeah. So what you're seeing today is the Small Business Administration develops lots of programs, and they kind of throw a lot of ideas out there. It's up to the banks themselves to decide which programs they want to participate in. And so nationwide, what you're primarily seeing right now are two main loan programs that banks will participate in. One, to your point, Pete, is called the SBA Express Loan. This Express Loan program is best suited for a service-based business or a home-based business, like maybe a cleaning company or a senior care company, a consulting firm, but something where you do not have to have that brick and mortar presence. Maybe you're running it from your own house, or maybe even a small office or a warehouse or something along those lines. But the other loan program that the SBA has developed, this one is called the 7A loan. And this 7A loan program tends to be better suited for your brick and mortar opportunity. So when folks are opening, gyms or spas or restaurants or hair salons, they tend to fall more into this category. And there are a couple of reasons that you'll see, one program being better for a different business model than another. So if we take a minute and just kind of pull apart the SBA Express Loan a little bit, one of the things you'll see is that the most we can borrow with that specific program is $150,000. So, if you were opening a hair salon, for example, it's very likely that you would want to borrow more than $150,000, just to sort of help get through all the startup costs, the construction phase, get your furniture in there. So the dollar amount tends to be, one piece of kind of the tipping point in terms of which program is better for you. The other big difference that you see is with the SBA Express Loan specifically, if there is any build out or construction to be done. So let's say we're opening a hair salon and we think that we can get by with a $150,000 loan. Maybe that makes sense. Well, the challenge that we have with this program is before the bank will put any money in your hands, they want to see a certificate of occupancy. And a lot of the folks that I work with don't necessarily know what a certificate of occupancy is. So that nice term that gets thrown out around there. Sure. What the certificate of occupancy is in a situation where you are leasing a space, let's say, for our hypothetical hair salon. We might walk into a space that's just four walls and we have some construction to do. Maybe we need to add a bathroom. Maybe we need to take down a wall, add another wall. The certificate of occupancy basically states that all of that construction and build out is done, that the location is suitable now for your clients or your customers to enter, right? It's kind of the safety check that you'll get from the county. And what that means with this Express program is you're using your own cash resources up front to cover all of the costs, all of the construction, all of the build out, all of the permitting. You're doing that yourself before you get your hands on the bank's money. And that just doesn't always make sense.
So a lot of float there. You're carrying a lot of that money until you get your certification or your certificate of occupancy. That's
exactly it. And to your point, one of the things we want to do when we're starting a new business is preserve as much liquidity as we can. Keep that powder dry, like you said. You always want to have that cash reserve. So again, if we're in more of a home-based business, or again, we're leasing a small office or a warehouse where we do not have that construction to do, this Express Loan can be a really good program.
Got it. Is there anything else that makes it easier for Express Loan? Is it faster or less requirements to do it?
It's interesting. The name is a little bit misleading because the only reason that it's faster is because we typically don't have construction to deal with.
Okay.
So the government still wants a bunch of paperwork. The bank still wants an application. They still want a business plan. So they really aren't removing many of those requirements, but we don't have to wait 3 or 4 months to find the right location and then build it out and get the construction done. So that does make it go faster.
Got it. And can somebody go anywhere to get an SBA Express loan, or SBA loan in general? Is it best to go to a company like FranFund where you guys know the good institutions, or can I go anywhere I want to get an SBA loan?
So you could walk into any local bank and say, hey, could you give me an SBA loan? And they, regardless of whether or not they're writing a lot of SBA loans, will be very happy to collect all your financial information. They will be very happy to understand what all of your assets look like. So they might turn around and say, oh, hey, Pete, you know what? We actually are not writing startup loans or, for startup businesses, but hey, we've got this great home equity line of credit you could take advantage of. You're a perfect candidate for that. So on a national scale, the approval rate for SBA loans is at about 38%. With FranFund, our success rate in terms of obtaining an SBA loan for someone that we've provided a pre-approval letter to is about 99%.
Oh, wow. That's amazing. So not only do you teach people kind of how to do it, but most importantly, you can actually get it done. So they have a lot of chance. All right.
No, you're exactly right. We've identified the lending institutions who are working with each of these programs. They're preferred lending providers, which means that they don't have to take every loan they're writing right to the federal government, to the SBA to get it approved. They can actually do approvals in-house, which certainly expedites things, makes things.
So the question I got to ask then is does it cost more if I go to my local bank and do SBA loan, or I go to FranFund? Is there a difference in cost?
So there is a flat fee for our service, which would be $2,500. However, it's our job to find the best interest rate, and it's our job to find the lowest cash injection that a bank is willing to offer. And, we work with a lot of folks who really hate the idea of using their house for collateral. And so it's our job to find the bank who will be flexible in that area, maybe let us use a different asset. So based on the fact that you have a much higher likelihood for success in actually getting that money in hand, and also we provide templates for the business plan, the projections, the pro formas, so you're not going that alone. And we've worked directly with the banks and lending institutions to develop these templates. So it'll be the back and forth that you would see, if you were to walk into a bank yourself.
But bottom line is that it may cost just a little bit more to use a FranFund than a traditional bank down the street, but you have all the infrastructure behind it and you have a lot higher probability. So I understand SBA funding. Nat, any questions on SBA funding you got out there?
No, Shirley makes it sound pretty easy. Some of the franchises actually get on the SBA registry, don't they?
So that's actually a requirement. And that's a new thing that the SBA instituted about a year and a half ago. So what the Small Business Administration now requires is every franchisor at the top level, at the corporate level, they need to provide the Small Business Administration with their franchise agreement, their FDD, their franchise disclosure document as well. And the SBA is not reviewing the information to say, hey, this is a good business, or nope, you're not going to make any money over here. It's not that kind of evaluation. But what the Small Business Administration needs to do is really ensure that the terms of the franchise agreement do not contradict any of the SBA rules and regulations. And, one of the big things they look for is that the business does not discriminate. So, everybody can come in and take advantage of this product or service. Everyone is welcome in our doors. Now, the service might be more suited for, one group or another. But those are the kinds of things that the SBA is looking for when they do their review. So in order for any franchisee of any franchise business to get an SBA loan, that franchisor does have to be on this SBA directory.
Yeah. Sounds like there's some kind of good checks and balances. And, I always tell people if you follow the process, you can really reduce your risk a lot. And I think just, these franchises being on the SBA registry and working with FranFund and a lot of agencies have basically looked under the hood of these franchises, and understand what's going on.
Mm-hmm. And I think the other thing that you find too, when you talk about, working with a FranFund or a company like ours versus walking into a local bank, sure, you might be spending $25 to get our hand holding and our support, but you're also probably opening your business sooner, because your loan more quickly. And so if you're opening your business sooner, you're generating revenue sooner, and, you're getting yourself to profitability and break even sooner. So I think that ultimately you're probably ahead of the game when working with a company like ours because everything is just more efficient.
All right. So
I love the idea of compressing time and getting open faster.
It's important, that's what this is all about.
So let's talk about other ways in which we could fund our franchise business. So what will be another common one people use?
One that, to us is very common, but to a lot of people out there is a total mystery and something that they've never heard of is there's a program, it's actually an IRS program called the Rollover for Business Startup. You'll see the acronym ROBS, ROBS, which always makes me laugh. Thank you, IRS, for that lovely acronym. You'll also just hear people sort of casually call it the 401k rollover. But what this program allows folks to do is access retirement savings. We work with a lot of people who have had very successful careers in corporate America and are ready to fire their boss, right? Or they're maybe looking to earn some passive income on the side to get to the point where they can fire their boss. But a lot of folks have significant retirement savings, and traditionally that's stuck there until you're age 59 and a half. You can't do anything with it, so most folks don't even look at it. But what this Rollover for Business Startup program allows is utilizing those funds and investing them directly into your own small business. So we have to follow the right process. There's certainly systems in place to do this, but the advantage in this program, this Rollover for Business Startup, is that we have the ability to access those funds with zero income taxes applying, zero early withdrawal penalties applying, regardless of how old you are at the time that we access this money. I think the easiest way to sort of understand it at its most basic level is, right now, let's say maybe you have a 401k from an old job, or maybe you have an IRA and it has $100,000 invested in Sony and Best Buy and Home Depot stock, as example. What we're basically going to do is replace Sony and Best Buy and Home Depot with your own small business. So now your 401k plan is going to own stock in your small business rather than being invested in these publicly traded companies. So, as the value of your business goes up over time, so does the value of your retirement account, and whatever happens on the market happens. That's no longer impacting your dollars. So it is a really, really common, very popular strategy. And I think especially for folks who maybe don't love the idea of debt when they're getting started. And we work with a lot of people in that boat. They want to hold on to as much cash as they can. They also don't want to pay interest, don't want that monthly payment hanging over their head. And this is a really good alternative.
Yeah, that's amazing. And from the standpoint, is there any kind of special rules? I mean, is the way in which you set it up? I mean, because it sounds like this is a great program, but I could see how it could be a little complicated.
So this is another one where you want a team on your side, right? I've never seen anyone try to go through this process and access their retirement funds without a FranFund behind them, because we're dealing with the IRS, we're dealing with the Department of Labor. So we do need to make sure that things are set up accurately. And, to your point, Pete, one of the things that you'll see with this program is when we create the business structure itself, the legal operating entity for the business, the IRS does require that it is a C corporation rather than, an S corp or an LLC are the other more common entities out there. The franchisee, so if I was going to invest retirement money into a business, I would actually become a W-2 employee of that corporation. And that's what gives me the ability to bring my retirement money over and invest in the business.
Now, one thing I know is that you can't be working for the company where your 401k is, right? So to use those funds. So you have to separate from the company, or it has to be a separate 401k or retirement IRA.
Right. Yeah. If you're working for Microsoft today, it's very likely that Microsoft will say, hey, listen, you can't move money out of this account while you're still employed here. You're going to have to terminate your employment relationship before you can access these funds. But on the other hand, you're working for Microsoft today and you've got some retirement money from your past life at HP. You can keep working at Microsoft and access that HP money to get your business up and running. There are a couple, nuances that way.
And can anybody do the ROPS program for somebody, or is it best to go with like a FranFund where that's what you guys do and you do well?
Yeah, no, you're absolutely right. This is another one where you would want to go with a FranFund. We've been providing this service for over 13 years. We have attorneys, accountants, ERISA specialists, which is sort of the legislation that governs retirement planning. And that's really important because, like I sort of mentioned earlier, the regulating agencies here are the IRS and the Department of Labor. And those are not fun organizations to mess with. So, it is really important that you do have a FranFund on to not only make sure that things are set up correctly up front and that your foundation is strong, but one of the things you get with this program is a 401k plan on an ongoing basis. So you and your employees can now make contributions to this plan. You all can save for your own retirement moving forward. And so that plan really does need to be administered correctly, and sort of have a second set of eyes on an ongoing basis. And that's what really ensures that you don't run into any issues and that this can be something you sort of set up and then set aside.
Right. So the ROPS program, the way I understand it, is that I can take money that's frozen that I can't normally use, and I can take it in a way in which it doesn't cost me any taxes or any kind of penalties and like that. And I can put it into my business, and it's like investing in my own business, right? Shares. And I'm an employee of my organization, and basically I can use this, but I got to do it right. If I don't do it right, it can be a very painful experience. So talk to us about other funding sources. So we've talked about kind of the SBA loans. We've talked about the ROPS program. What else? What other ways in which people fund their businesses?
Depending on the business that you're moving forward with, if you have like heavy equipment or machinery, if you have big trucks, let's say, that you need to sort of cart this equipment and machinery around, you may find vehicle leasing or equipment leasing packages. Sometimes the franchisors themselves in a scenario like that will have a specific relationship they've developed, maybe with, a leasing company that specializes in trucks or specializes in a certain equipment that might be required. So that's something that we'll see every once in a while as well. There are other programs out there that I would say maybe could fill a gap, but you might not use it as your overall funding strategy. So what comes to mind in that kind of scenario, there's a program called unsecured credit. And unsecured credit really is a credit card-based program. So you could qualify for up to $100,000, but that's going to come to your business on probably 6 or 7 separate credit cards that together have a combined limit of $100,000. And so this one, again, I might say, hey, if we need to know that we have $20,000, $30,000 available, right? If we need to know that we have a cushion to fall back on in a worst case scenario, sure, we can kind of line this up as a backstop. But I wouldn't say that it's a program that a lot of folks will use for their total funding strategy.
Yeah, it sounds painful to me.
Yeah.
What about I have people that use equity in their house because it's cheap money. So do you see a lot of people using equity out of their houses?
I do see some people doing that. And the way you go about that sometimes is a little interesting because there are a lot of home equity lenders out there that when you say, hey, I'm borrowing this money to start a business, they'll say, great, I'm going to put you in touch with my SBA department. So the way that folks come along or, come by those home equity lines of credit can be different from time to time. And the other thing that we have to sort of balance is if this person also would like to have a small business loan, we might actually need to maybe utilize some of the equity in their home as collateral for that loan. If they're borrowing more than $150,000. So if we kind of bump out of that express program that we talked about earlier, it's very likely that the bank is going to ask to use some equity in real estate, or something like that as collateral for the loan. So if you've gone ahead and pulled all of your equity out, we could find ourselves in a little bit of a catch-22 situation. So, depending on the scenario, a home equity line of credit could be a good option. But what we like to do up front is sort of understand the full financial picture for our client, understand, how much money they think they're going to need access to for location one, but also what are the future.
Okay. So you got to, as you look at this, that it all works together, right? So
Yeah.
what about, I've had a couple candidates that actually use lines on their brokerage accounts. Do you see much of that?
We do. Now, you do have to have a pretty significant brokerage account to make this work. You probably need to have somewhere in maybe the 180 range or above, $180,000 or more in just non-retirement stocks, bonds, mutual funds, those investments. Because most of the time, your Merrill Lynch or your Fidelity or, the wealth management firm that's writing that line of credit, their minimum is typically $100,000. But to your point, generally there are no startup costs, no origination fees associated because you're borrowing from your own asset, and interest rates are pretty low. So for people who have a pretty robust portfolio, it is definitely something that I bring up and make sure that they've at least had the opportunity to explore.
Okay. So it sounds like we've got lots of different options. If we're looking to invest in a franchise, we can pull from many different buckets. My question for you is, can you use a combination? So can I do SBA funding and do the ROPS program together?
Absolutely. You definitely can. And that's probably the most common strategy would be that sort of combination. We see a lot of folks using SBA loans plus 401k rollover. Sometimes it is, that ROPS program, the 401k rollover plus cash resources. So you'll see lots of different combinations. But again, I would say that that's most common is to see that sort of combination versus just one or the other.
Okay. So lots of different funding options. We can combine things. So my question for you then is, what are big mistakes people make? So when people are looking to invest in a franchise, they're using all these different sources of funding. What would be examples or mistakes, key mistakes people when they're funding their franchise business?
That's a really, really good question. So I've been with FranFund for about 7 years now, but for 13 years before that, I was involved in franchise sales and development myself. So, I even saw some mistakes on that end of things, on that side of the spectrum. I think one of the biggest mistakes that people make is using the lowest bottom line estimate that they could use for startup costs. So if we get a range of startup costs that says, it could cost you somewhere between $120,000 and $200,000 to open this business, I really caution against using that 120 figure when we're starting, right? We might land there, we might get lucky, we might get a really nice surprise that our startup costs were on the lower end, but we need to be prepared for the higher end just in case that's where we fall as well. And so I think the one mistake is just, upfront, that wishful thinking that, yes, we're going to be at the very lowest level for investment here to make it work. I think planning for a little bit more and giving yourself that cushion is really important because you don't see businesses close because they have access to too much capital. Those are the phone calls that we're getting.
So that would, to translate that, they're undercapitalized.
Yes.
All right. So they don't plan to have enough capital. They underestimate the total investment. All right. So one is undercapitalizing. What's another common mistake?
The second common mistake is sort of, I think a point we've touched on a couple times, but it's using all of your liquidity up front to get your location open and then not having a cushion to fall back on, whether it's for personal or business use moving forward. But that whole idea of preserving liquidity up front, giving yourself that cushion to fall back on is really, really important when you're getting started. And so I think that that's why these funding options tend to come into play so much, so that, we're not taking the balance of a bank account to zero on day one.
All right. So the bottom line is they're not protecting their liquid capital from that standpoint. So they're doing that. All right. Good. Mm-hmm. Another common mistake people make. I
would say another common mistake people make is not listening. So I know that sounds really simple. But the thing that I tell people all the time is, hey, you're moving forward with this franchise because you believe in it and because they have systems in place. And they've been able to show you where the pitfalls could be so that you don't fall into them. Listen to that. Don't walk into this thinking that you're going to change the world and, hey, I like A and B, but I'm going to do C through F differently. That's not the right opportunity for you. If that's how you're feeling about this business and you are going to spin your tires and you're going to waste a lot of money, trying to make changes that don't make sense. So, like I said, I know it sounds really basic, but if you're moving forward with the franchise because you believe in it, follow their system as well. And I think that that's where you find your success.
Right. So if you're going to take all your funding and invest in the business, make sure you're all in, right? And your
Yeah.
Makes sense.
What else, Shirley?
Another thing that I would encourage folks to do is look at it early. I mean, I kind of made that analogy earlier of, shopping for a house. Most people out there go get pre-approved, right? They know how much of a mortgage they can afford, and that helps them to figure out what category of house should they be looking at? What price range are we in? We can get to that same place with small businesses. And I think that what that helps with is focus. That you're looking at the right opportunities for you, for your finances, that if you fall in love with one and you think you can be really successful, you can also make it work financially so that all of the time and effort you're spending up front in this research process makes sense, and gets you to a goal.
All right. So plan ahead, understand what you can qualify for or what you're capable of doing. One of the mistakes that I saw somebody do is they tried to save money on the ROPS program and literally went to a no-name company, and they, the fee wasn't quite as much, and they thought they're getting this great deal. And the company actually set up the structure wrong, and it was in violation of the ERISA laws. And luckily, the candidate found it before. And, you don't hear many of those horror stories, but this idea of people trying to save money on getting the help, whether it's the Express loan, SBA Express loan or SBA loan or the ROPS program, right? So I think a mistake is that sometimes saving money isn't necessarily the right thing.
It's that whole tripping over dollars to pick up pennies scenario. You really want to be careful of that when you're going through this process. And it's an interesting point that you make, Pete, because I've seen recently there are, a couple companies out there, very new, not with any experience, not with maybe even the right professional team behind them, saying, oh yeah, you don't need anyone to oversee this plan on an ongoing basis. You can do it all by yourself, which really strongly contradicts the IRS regulations. So, I mean, you're right. Working with a reputable partner is really important.
All right. So there's lots of funding sources out there today if you want to invest in a franchise. And there's certainly ways in which you can make mistakes. So you want to do it right and pick the best method for you. And so as you see kind of funding as we go forward, do you see any kind of new products or any kind of things that are changing out there that we need to know about?
And I've not heard of any new products that are being developed or that, the SBA even is sponsoring. So I think that probably at least through 2020, as it relates to borrowing, we're going to be using those standard Express and 7A loan programs that the SBA has developed, just sort of based on the business model and the amount of capital necessary. One thing that is sort of interesting that we've really just started to see even in the last 6 weeks or so is there's this test the SBA has called the means test. And what the means test is designed to do is say, hey, potential borrower, do you really need this SBA guaranteed loan? Do you have the means to get this money from another source? And so it's really counterintuitive because you would think that a bank would love a very well-qualified candidate. You would think that a bank would love the person who could go ahead and pay for this in cash if they wanted to, because that gives them a greater likelihood of being paid back. But we are starting to see a little bit of pushback on that. And so I think that that's going to be something to watch for, that interestingly, your most qualified folks out there, your folks with the largest amount of assets may actually have a little bit of trouble obtaining these SBA loans, or we may have to jump through more hoops to prove that we need it. So I think that that's been a little bit interesting.
Wait, I want to make sure I understand that, because this is the first time I've heard of this, right? So if I have $1 million in my 401k and I decide that I'm going to do an SBA loan, a 7A, right? And I'm going to do $300,000 in terms of a loan. And I go through this means process and they say, listen, wait a minute, you got $1 million in your 401k that you could access and maybe a couple $100,000 in cash. And so we don't know if you really need this SBA loan. So we're going to turn it down, or we're going to put you through more hoops. Did I get that right?
More hoops is what's more likely to happen, because what the bank will ultimately need to do is demonstrate to the SBA that, yes, this person needs a loan that the government is backing. And the easiest way to do it. I think what will ultimately happen is, as we sort of talked about a little bit earlier, when banks are writing a loan for your first location of a business, they are adamant that they have that SBA guarantee. And so I think what's going to be is a matter of sort of demonstrating that, okay, federal government, no, we cannot get a bank to write us this startup loan without your guarantee. Now, retirement dollars will probably not be as heavily scrutinized as just cash or non-retirement securities. So your person with a pretty hefty portfolio outside of their 401k, that might be the one that has to jump through some extra hoops.
What about home equity? Do they look at that the same way they would look at it 401k, or do they look at more as that like cash available?
It's more so the liquidity and the like stocks, bonds, mutual funds, your more traditional investments, that sort of thing. So 401k does not come into play as much. Home equity line of credit may, if maybe the home is paid off and they have access to some of the equity, but it becomes more about your more liquid folks, who either just through cash and savings and or a non-401k, non-IRA security portfolio, when those start to get into the hundreds of thousands, million area and above, that's when we're probably going to have to jump through a few extra hoops. And, those are not the folks who expect to have to jump through hoops to get access to capital. So it's an interesting scenario.
Yeah. And Nat, you and I were talking about this the other day about how lucky we are in today's world where there's a lot of capital available.
Yeah.
And so Shirley, do you kind of see this availability of capital continuing, this good availability of capital going, through 2020?
I really do. There have been no signs that, SBA limits are going to come down in terms of you just overall in a year, how much of these loans the federal government will guarantee. They'll kind of set caps each year, and we're not seeing that come down at all. Again, they need to lend this money. So, they're much more to lend this money to someone opening a franchise business than they are to, Shirley's hair salon, right? Because they know that franchise system has experience and training and support and marketing. And, they're assessing the geography and making sure we find the right location. So even if we were to start to see things really tighten up, I think that folks moving forward with a franchise system for their first location of a business are going to naturally be in a better position because the banks understand that model and the fact that you don't need to come to the table with specific experience yourself. The franchisor is bringing that with them.
Okay, that's a great point. So if you're investing in a franchise, you have a lot higher probability or better probability of getting funding because they understand you got the systems, the process, procedures, the support to help you be more successful.
And then that ultimately, lends itself to being a benefit of working with an organization like FranFund because we get to know these franchise companies. And so we're able to pitch them to the banks. So, when a FranFund proposal comes across the bank's desk, it goes to the top of the stack. They expect that it's a business they're going to like, then they've probably seen it from us before. And they know that the loan package is going to be accurate. It's going to be complete. They're not going to have to ask us for information. So all of that does sort of roll into just, a tighter, more efficient process for the business owner.
That's great. So lots of funding sources out there. There's certainly ways in which you can combine them or leverage them together, but there's pitfalls. You can make mistakes out there. And as we see going forward, there's capital available and there's all different great ways to do it, but you have to be careful, right? As you go forward. Perfect.
Yeah, no, absolutely.
Well, Shirley, it has been great. We're very appreciative of everything that you've kind of shared with us today. I've learned some stuff and from the standpoint.
No,
anything you want to throw in here?
Thank you, Shirley, for joining us today. And it's always a pleasure working with you. And I know that some of the candidates recently have been getting successfully funded. So it's going to be a great 2020 for a lot of people.
Yeah, I think so too. I'm excited about the year to come. And I really appreciate you, inviting me here. I'm a big nerd for franchising and funding. So I love talking about all this information and, helping people get informed as much as I can. So thanks so much for coming.
You got it. Thanks, Shirley. Appreciate your time today.
Thanks, guys.
Thanks for listening to this episode of the Hire Yourself podcast. If you enjoyed this episode, please subscribe, give us a rating, and leave a comment on iTunes or wherever you're listening to our podcast. Hire Yourself offers some great resources on our website at hireyourself.com. And if you would like more content regularly, follow us on LinkedIn or Facebook. We look forward to you listening again to help you on your journey of living life on your own terms.